It's time for our trader game. Top that trade. Joining us now, the players, Alan Nuckman of Agora Financial and Phil Flynn, a Fox Business Network contributor. Here we go, guys, with round number one. Bull back, baby. We may have just seen the shortest bear market in history. It's already over. What happens now?
Well, it depends on the money flow. $3 trillion from the government or another $3 trillion from the Fed fueled this rise. So let's see where we go from here. But it only took 33 days versus an average of 200 for a bear market to turn back to a bull. So I'm very positive. It was a 1,200-point drop. So every time in history, it's rallied the distance of that old drop on that previous top.
I think it's amazing what we saw here, and it's never happened before, and it has happened because of unprecedented stimulus, which gives me a lot of hope for the overall market. Now, I think a lot of people are critical that there are only a few stocks that have been driving the market back, but I think, rising a couple of stocks really raises all the boats because people start looking for value in companies that are undervalued. So when you get a few that have really driven the market, and they are signaling things are going to be better with the economy, that means that there's some laggards down below that haven't participated that are going to be really good buys.
Fueling this fire, that's the big question. You got to keep feeding it the money. Keep feeding it the money.
Round number two. Pocket change. Robinhood's rise and fractional shares have changed the stock game. Some think Wall Street is being greedy with small investors. What are your million-dollar thoughts?
I mean, I think there's two ways to look at this, right? There's a lot of people that say, hey, if you don't have a lot of money, you shouldn't be investing in the stock market anyway. But then I remember myself as a young kid looking at the stock market, wanting to get involved with some stocks that I couldn't get a piece of, and I was left out in the cold. Had I bought those stocks 30 years ago or 40 years ago, I'd be very wealthy right now. So I think it's very good for people to get involved in the market in a way where they have limited controlled risk, right? We know that, hey, if you buy a stock, if they're aware of the risk, that if the company goes bankrupt, you could lose all your money. But having said that, the truth of the matter is that it allows more people to participate in a market that could create wealth for them for a long period of time.
Bloomberg have both said it makes it too easy for people to trade. That's the point.
Right.
You want to give people access to opportunity. That's ridiculous. Fractional shares are now a great way, so it doesn't matter what price the stock is. And it's for us, it's about percentage return, not the price. That's important. So give everybody a chance.
Whoa. Round number three. Pick six. 6 stocks have supported the S&P 500 surge, with all others down 4% in 2020. What would you buy, those hot stocks or the down dogs? Of course, the hot stocks are Apple, Facebook, Google, Microsoft, and Netflix.
Well, you can't fight the forces of nature, and those guys are making a lot of money. Look at the owners or the shareholders in those stocks. You can't argue with Bezos, Zuckerberg, and Elon Musk. So, yeah, those markets are strong. I do like the downtrodden stocks. Here's a dog that's been kicked. Goodyear Tire between 5 and 10. That target's 15 on a breakout here. So I'm looking at the January $7 call for trading around 3. It's down 40%. So I think you're going to see a snack back and hopefully a trickle down to some of these stocks that haven't participated.
You have to look at these stocks and see why they're outperforming everybody else. And I think the main reason is COVID. Let's face it. A lot of these stocks that Ellen just mentioned, your Apples, your Facebooks, your Netflix, they did well with COVID. They're going to do well during the recovery. So they're almost like the Teflon Don when it comes to this crisis. Other stocks that have been really hit hard because of COVID, they have nowhere to go but up as long as COVID gets a little bit better. And with the hopes of the vaccine at the end of the year, there's probably some very good value stocks. If you look, for example, at travel and leisure stocks is a good example.
Well, it's on to the bonus round for today. And sadly, summer is quickly slipping away. But let's keep that summer fun going with some ticker time for summertime. Can you spot the true ticker? Is it sand, beach, or boat?
Oh, boat. I would like to be on my boat. Yes. I don't care if I'm wrong, but there's the few seconds I can visualize being on my boat is well worth it, even if I lose.
Sand. I like playing in the sands. Sands.
Oh, Phil, the Sand Man, you are the winner this week. Great job, guys. Business First AM continues right after this.